Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a senior manager of trading and derivatives education here at Schwab, and this is Getting Started with Thinkorswim. And today is for the technical traders in the audience, the chartists. Today, we're going to be talking about building some fancy scans to search for chart trade signals using the Thinkorswim scan tool. Sometimes a trader has an idea for what they'd like to see on a chart, but they can't quite find that chart that's actually showing a signal. So we're going to be setting up a bunch of example trade scenarios and then going and scanning for signals based on those scenarios. A lot that we're going to be covering today. Should be a great discussion. Before we get to any of that, though, let me first of all say hello to everybody who's already chatting in out there in YouTube. Great to see all the familiar names as always. Hello there, Richard, Life in the Fast Lane, Eva, Robert, Chris, Will, everybody else. Thanks for joining us week after week. We always do appreciate your attendance or your contributions to these discussions. If you're here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the live stream has concluded, well, enjoy the recording. It's a great way to watch these webcasts, but also be aware that you're invited to join us in the live stream if you'd like to be here. This is a Wednesday webcast series. We kick things off promptly every Wednesday at 2 Eastern time. Now, I also want to let everybody know that another one of our coaches, Connie Hill. Connie and I have been working together for years and years and years. Connie's going to be hanging out in the chats with us. She's going to be addressing any questions that I can't get to. She brings a ton of experience to this discussion. So thanks for having my back there, Connie. Connie and I would also like to issue an invitation to everybody listening. If you have an account on X, you should be following your favorite Schwab presenters there on X. You can find Connie on X at Connie Hill CS. You can find me there at Cameron May CS. And as I've been announcing recently, there is a new way to connect with me out there. You can find me on LinkedIn. Just look for Cameron May on LinkedIn. But let's get into this. First of all, we need to consider the risks associated with trading or investing, whether it's technical approach or otherwise. All corporate and issuer names and market data shown are for illustrative purposes only and are not a recommendation, offer to sell, or a solicitation of an offer to buy any security. Schwab does not recommend the use of technical analysis as sole means of investment research, and investing involves risk, including the loss of principal. All right, so here's what we're going to be doing today. I want to talk through the really powerful scan features that are available on the Thinkorswim platform, specifically for scanning for what we call study filters. That is looking for chart signals using that scan tool. So what we're going to do is set up example chart scenarios, talk through those, and then go show how we might conduct a trade, or conduct a scan to find trade signals for that sort of a chart scenario. And it's sort of going to be a lather and rinse and repeat. We're going to be acquainting ourselves specifically with the study filter tool that's only available on the live platform. So a heads up there, if you're trying to follow along on paper money, you're not going to be able to do it. This is one of those features that is exclusive to the Thinkorswim desktop live platform. So that's going to be what we're going to be going through today. Let's go right to it. And I think we'll just start off today with a chart of alphabet. All right, so let's talk about how a technician might approach an example trade scenario. And one fairly common approach is to look at trend lines and the interplay of trend lines. And specifically, let's use for today an example of what we call a crossover. So here's what we're going to do as we tie this to our scan tool. We're going to be using the Stock Hacker tool. And within that, we're going to be using the study filters. All right. Now, I'm going to actually, let's just clean off this. We're not going to be using any of these stock fundamentals filters. So let's just close those out. And for each of our scans today, we could scan in all stocks, but how about we direct these specifically to the S&P 500? See which members of the S&P 500 might be generating certain types of technical chart signals. All right, so if I start off our discussion by clicking on Add Filter, and I choose Study, as I do this, how many of you have done a study filter before? Looked for specific chart signals using the scan tool here. Well, if I choose that, I get a menu here that we're going to work through, not exhaustively. There's way too much that I could cover. I'm just going to hit a few highlight items. And I think what we're going to be doing here first is scanning for what we call a crossover signal. So here's a typical crossover signal. Going back to our alphabet chart, Let's say that our trader is just looking for short-term and intermediate-term trend sort of interplayed behaviors. And so what they might look for as we add, let's say a couple of simple moving averages to our chart. So I'm going to click on our little beaker or flask icon. Let's type in simple for simple moving average. Let's add one and click again, add two simple moving averages to our chart. Both of those by default are going to be for 9 days on a daily chart. I'm going to change our first one to 10 days. This might be typical of a short-term trend line. Let's change this 10. Let's make that one red, kind of a hotter color than the other indicator that we're going to be using. The second one, let's change that to a 50 period moving average. We'll leave that one green. Click OK. Click Apply. And what we're left with as we click OK again here are these two lines on our chart. We have our red line, which you'll notice is a little bit more jagged in its presentation, changes direction more rapidly. That's because it's looking over the last 10 days of data. It's looking at the average closing value over the last 10 days and then plotting that on a chart and plotting that as it changes from one time frame to the next. So we wind up with this shorter term indication of possible trend. The green line looks at 50 days worth of data. That's just the time frames that we selected. So that's sort of a more of an intermediate view of trend. It's not going to change as rapidly. It's going to be a little bit smoother trend. And for some traders, they watch how those trends behave compared to one another. For example, if the shorter term, in this case, the red 10-day moving average is above and remaining above the 50, the intermediate term trend, that might just be a confirmation to that trader of continued bullish trend. Now, if our shorter term trend line weakens and crosses down below, and James says, how do we start a new scan? I'll show you that, James. Good question. But if our shorter term trend starts to reverse and weaken, for some traders, it's technically significant when that shorter term trend crosses down through the intermediate one. So you might see a bearish signal right here, indicating that maybe prices are weakening enough to start dragging that intermediate trend down. Now, just the opposite is true for a bullish signal. If our shorter term trend line starts to cross up above the intermediate, that may be a signal that maybe prices are strengthening, and it might set a new pattern for the days and weeks and possibly months to come. Obviously, nothing's a guaranteed approach to trading or investing, but these crossover signals might be key. Now, this is just an example on Alphabet, but what you might notice here on Alphabet is the 10 is still firmly above the 50. It doesn't look like it's anywhere near giving a signal of any kind, and it's way after the last bullish signal. So how might a trader using this sort of an approach go look for maybe a more recent signal? This is where these really powerful tools can come into play on that scan feature. So let me do this. James, I'm going to go to that scan, and let's just start from a blank slate again. All right. So to start a brand new scan, you can come up here to the little menu icon, 3 dots and 3 dashes, just click reset. It's going to ask you, are you sure? Yes, I'm sure. So this is basically just starting from scratch. So let's build this new scan tool. And I'm not going to be using, as I mentioned, these stock filters. So I'm just going to click the X's, take those out. Nice clean scan. For each one of these, we're going to be running these through the S&P 500 companies. So we can click on Scan In, go to the public watch lists that are created and published by Thinkorswim, and go in alphabetical order to the S&P 500. There we go. Now, finally, let's go up and do a scan for using a chart filter. Now, technical tools on charts, sometimes they're called indicators, sometimes they're called studies. So this is a study filter. Now, this one, it doesn't know what we're looking for, but what it does is give us an alphabetized menu of potential study filters. And we could filter for candlesticks. I decided not to talk. I kind of had to just go pick some. Can't cover them all. Time won't permit. So I'm going to go to the crossovers, And what kind of a crossover system that I just described? There are all sorts of crossovers that might be selected here. We were using what's known as a moving average crossover. It's a comparison of two moving average lines. So let's go up here to the top of our scan here, having selected moving average crossover as our study filter, and tell it the length of each moving average. We were using a 10. Simple. We could choose exponential or a weighted, a Wilders, or a whole. If you don't know what each of those are, what you can do is just go to our YouTube channel and do a quick search. So do yourself a favor. Like if you don't know what a whole moving average is, there's a video I made about what they are and how to trade them. If you are new to these webcasts, though, make sure that you do yourselves a favor and follow and subscribe to our Trader Talks channel. Trader Talks channel is where you can join the live streams, but you can also find the archives for our previous webcasts. So the full name of the channel is Trader Talks Schwab Coaching Webcast. You can go down and click on the subscribe button right now. It only takes a second, doesn't cost anything to do that. But yeah, this is where we house those sorts of things. In any case, let's go back to our filter. So we're looking at a 10-period simple moving average, crossing above, in this case, the 50. That would be our bullish signal. And that's going to be a simple moving average. And that's it. We're actually ready to run a search. Let's see how many of the 500 or so companies comprising the S&P 500 actually have a 1050 bullish crossover just today. Let's click scan, and guess what? There are 3 of them. Coke, we have General Motors, and we have Regency. How about we just go with Coke here? Let's look at KO. Yep, what do you know? So Coke has been trending downward. So we're looking for something that looks like this. Cross of the 10 above the 50. And what do we have just today? This has been spurred by a recent earnings announcement, but the 10 pretty definitively crossing above that 50. We'll see if it continues to move up from here. But this is where we're connecting a plan with sort of an efficient application of that plan using the scan tools. That's great. So that's one tool that we might use. All right, let's pop back up here. Let's clean up our chart. So what I just did is I clicked on a little flask icon, and it allows me to click the little X's to remove those 2 moving averages that we've added. Let's close those out, click apply, and click OK. And next up, we have, if we were to go back to our scan, if we were to look through the list of potential items, these are the defaults. How about we do a scan for one of our popular studies? All right. So what might that be? Let's go back to our charts. Let me bring up maybe Verizon. And for some technical traders, when a stock is moving up or maybe even going sideways, they'll note that the stock will tend to move in short-term cycles. It'll run up and pull back and run up and pull back. And one particular set of tools that's commonly used to identify lows within that sort of a pattern is the RSI. So I'm going to come up here to our little flask icon. Let's add RSI as our example study this time. Click add. I'm just going to leave it at its defaults, click apply, and click OK. And so here's our stock chopping up and down and up and down. And we've all heard the phrase, buy low and then sell high. Well, how might we do that? Oscillators are actually designed specifically to try to answer or address that question. They're not a guarantee of performance, obviously. But in the case of the RSI, traders very commonly will look for this indicator to fall down sometimes as far as below 30. This is a range-bound oscillator. It just moves up and down along a horizontal axis. Sometimes it's in an overbought range. Sometimes it's in an oversold range. And sometimes it doesn't quite get down to oversold, but it gets close. But basically what the trader might use this for, the signal they might be waiting for is either to get close to oversold or flat out down into that oversold range. In this case, that would be below 30. Now, what you'll notice, we've had a couple of examples of Verizon dipping below 30 over the course of the last 12 months. It doesn't happen very often. A little bit more frequently, is to get down to about 35. So for some traders, if they're looking for more signal frequency, maybe they're okay with a stock that's just getting down below 35. And as a matter of fact, I ran a scan before I launched this webcast. There were exactly 0 of the 500 companies or so that make up the S&P 500 that are below 30 on the RSI. So imagine if we're just looking at them one at a time, trying to find one. If we're just applying a manual process, it could be very frustrating with no fruit to show for our labor. So in this case, how about let's conduct a scan for stocks. And is this actually right below 35? It's darn close. It's not quite below 35 at the moment. But yeah, Verizon's even getting close. Let's go do a scan for a stock where that RSI oscillator has dropped below 50. So let's go to our trade tab, our scan tab. If we'd like, let's do this one more time. Let's just reset. So we're starting from scratch. So we can get a little repetition from that, close out those stock filters. You don't even have to close those out. I don't like things to be cluttery. Let's add our study filter to be run through the S&P 500 component companies. Let's go to our study default menu. And I'm going to go to those popular studies, one of which is an RSI scan. So let's select RSI. We're going to leave that as the default 14. That's just the default that Wells Wilder used when he constructed this, looking over the last 14 days. But we're looking for the RSI not to be above 70. That might be a signal that we're overbought, but maybe less than, what did I say? 30 is an extreme. 35 may be a little bit less extreme. So let's look for 35. And let's scan. Let's see how many companies in the S&P 500 might be below 35 on the RSI right now. And we've got a pretty good number, including, hey, what do you know? There's Verizon has dipped down today. Might have slipped back up above a little bit. Let's see what's going on with AT&T. Maybe look at Texas Instruments. There's AT&T. Look, it is below 35, and it's actually teasing down there close to 30. And you can see when our oscillator gets low, quite commonly, that might be a signal that price has reached a short-term extreme low, maybe set to advance. Let's look at Texas Instruments. Yep, that has also dipped down close to 30. Andrew says, how do we make the scan a dynamic scan? Now, Andrew, you're going to have to clarify for me. What do you mean by dynamic? Because this one adjusts in real time for either stock is qualified at the moment the scan is conducted, or it's not. But yeah, you can see we've reached below 30 on Texas Instruments a few times over the last 12 months, and it's done a pretty fair job of identifying short-term lows. Again, it doesn't always work out. Sometimes those lows don't hold for very long. But that's how we can, again, connect an idea to execution, an idea to efficiency. All right, so let's close that one up. And I want to look at another concern that some traders have. Some traders really like to emphasize the strength of just price action itself. They like to see stocks that have been moving higher and higher and higher, and then plan and place trades around that. So for them, their priority might just be, first of all, price is at or near highs, and then they might add other chart qualifiers to that concept. So as an example, let's look at what's going on with Johnson & Johnson. Let's see. Andrew, did that answer your question? Great. Yeah. Dave says, do scans work with pre-market? So you'll notice these charts are only for the traditional trading hours, these candlesticks. We could direct it there, but I'm not going to for this demonstration. Let's see. Oh, I think, okay. Yeah. Yeah. So what Connie is proposing and what some of the rest of you are proposing. So if we've conducted a scan and we want to maybe save that scan, maybe not even have to rerun the scan. Wouldn't it be nice if we just had a watch list that was dynamic, that just automatically populated with new symbols that were qualified according to a scan that we built a couple of months ago? We can do that. Yeah. So maybe remind me before we're done, and I'll save a scan, and that, without doing anything else special, also saves it as a watch list. Right? But yeah, look at what's going on with Johnson & Johnson. This is one of those stocks with the S&P trading right near all-time highs, but actually peeling back as we're talking, down about 2%, or pardon me, down about 1%. So we're down maybe 1.5% from all-time highs. A lot of stocks actually aren't that close to all-time highs. The S&P 500 is kind of pulled along by a small minority of stocks. So how do we find those stocks? Those stocks that are really strong, the strongest. Well, as we go back to our scan tab, let's close out this scan, add a new study filter. And in this case, I'm going to go to a price performance scan. And this one, we're going to use the near high lows. It's a little bit awkward wording, I'll admit. What this is literally saying is we're looking for stocks that are either near highs or they're near lows. And then what we just need to do is define how near those highs. So let's select near high lows. The current price is within, let's say, 1% of the 252 period. What does 252 period mean? 252, well, we're looking at daily charts right now. So if we leave this default over here at D for day, we're looking at the last 252 days, which is a pretty good description. They're typically 251, 252 trading days in a year. So within 1% of the 1 year highs, basically what we're talking about here. So if I run a scan, how many companies might be in the S&P 500 might be within 1%? You might think, well, the S&P itself is almost there. There must be like 200 or 300 companies within 1%. I don't know. Let's quickly run a scan. And nope, it's actually about, it's not even 24, 18, 20 companies, including right up there at the top, Johnson & Johnson. We have Duke Energy. We have McKesson. If I were to go to the charts, let's see if this has done an effective job of finding those companies. Are we trading right now on Duke at or near highs for the year? Absolutely. What about, was it McKesson? Yep. Trading up there at those highs. So this is now what I'm saying, what I'm showing here are a bunch of filters that as they stand alone might be powerful, but obviously the trader might also then, once they've identified 2 or 3 that they like, they can start to combine those into their own custom search. I'm just going to use it just one part at a time so that we can acquaint ourselves with that before we get fancy and start to build a combination sort of a scan. All right, so we have crossovers, popular studies, and price performance. And what about volume? Volume can really drive price either up or down. So as an example, if we just switch over here to ISRG, here's Intuitive Surgical. I wish there were something to tell me that Intuitive Surgical had such a strong, well, let's add volume so we can see that, but such a strong volume day resulting in a strong move. Now, if we don't have volume down at the bottom, there's a box that needs to be checked here in our chart settings. So I'm going to go up to the little gear icon for our chart settings. This is a stock chart, otherwise known as an equity. So I'm going to go to Equities, and I'm going to check the box for Show Volume Subgraph and click Apply, click OK. There's that volume, and we can just look at this histogram bar, and just its physical appearance tells us this is strong volume compared to where we've been over the last week, the last month, the last 50 days. Let's do a search for stocks with unusually strong volume over, let's say, the last 50, compared to where the average has been for the last 50 days. Let's go do a scan. You know what? We don't even always have to delete a study filter. If we want a different one, we can actually just change it. So let's leave this one on here and just switch it. We're going to go down to volume, and I'm going to look for unusual volume. So Deepak says, is there a way of identifying buyer's volume versus seller's volume, or do you derive based on price action? It could be done, Deepak. the quickest solution to see whether it's a balance of buyers versus sellers is just observe price. Yep. All right. But let's choose unusual volume here. Let me expand that downward just a little bit so that we can see the entire working bar that we're dealing with. So for unusual volume, we're looking at the current bar, in other words, the current day. How much volume are we having today? And we're looking to see that that has increased, at least by default, it's saying 20%. How about we say at least 50% from its typical average over the last 50 periods or days? So we're looking for 50% stronger volume than average over the last 50 days. Let's run a scan. And we only have about, just a little bit, maybe over a dozen, including some now familiar names. We've seen ISRG, there's Netflix, there's AT&T. Let's see what's going on with those other stocks. If we were to look at Netflix, very commonly strong volume is going to be associated with events and its earnings season. So most likely event right now is going to be earnings. In this case, what do you think, Deepak? Big volume day. You can see that big spike down. Now, we've learned in the past, if we want to see, here's another thing you might consider, Deepak, if you like to see buying versus selling volume. In the chart settings, if you go to appearance, let's see, I believe this is where it is. It's been a little while since I've done this. Getting a little bit ahead of myself. Let's see, where do we change the color of the volume? Oh yeah, that's it right there. I was in the right place. Yeah, preset color. We can just check the little box that says color as symbol ticks. In other words, red represents down volume. Now, this is not going to be close to close. It's actually going to be what did price do from open to close. So it's sort of intraday volume. But that might show us that sort of tug of war between buyers and sellers from the opening bell. Now, I'm not going to do that. I'm going to leave that at the preset color. That might be helpful for you. You ask the question. I like to provide answers where I can slip those in. So we've learned how to look for unusual volume. We've learned how to look for stronger price. We've learned how to look for the interplay of different moving or different indicators. But traders don't always just like to go to the default. Sometimes traders like to, they know what they know, or they know what they like, and they want to be able to build a custom filter for the indicator of their choice. So how do we find that? Let's clean up our chart one more time. I'm going to come back up here to our chart settings. Let's just take that volume subgraph off for just a moment so we'd have a nice clean chart. And let's suppose, let's use maybe NOC as an example for this final discussion. Let's say that our trader uses whatever technical indicator. How about we just use one that might be familiar to a lot of you? It's known as the MACD histogram. MACD histogram is it's a momentum oscillator. It's an indicator that rises and falls. And for some traders, they might see if it has fallen far enough and it starts to turn back up, that might be an indication that there's a shift between buyers and sellers. Maybe the sellers have had control and the buyers are starting to resume a little bit of strength, and the momentum might be shifting, maybe indicating that price is set to go upward. But let's apply that to our chart. So here's what I'm talking about. When our histogram dips down low and starts to rise, as signaled by a bright red histogram bar shifting to a dark red, that may be a signal that price is at a short-term low. It's not always the case. Sometimes we can get that shift and it doesn't happen immediately. We get another shift and then it works. It's never perfect. But in any case, the trader might be looking for a histogram that has dipped low so they can watch to see if we start to get a rise again, right? That might be a signal that short-term price has come down to maybe lows, possibly set to go higher. Well, how might we do that? It's a very specific signal. And we have to know a sort of a combination of features in that scan tool as we build a custom filter. So let's go to our scan tool. And here in our menu, we're not going to be using any of the defaults. Instead, we're going to build a custom. All right. Now, actually, let me clean this one off. Let's start from scratch. It's one more opportunity. Let me go over here, close this out. I'm going to do it one more time, just for the people in the back who maybe didn't get a chance to see us starting from scratch. I've just hit reset. We're going to start from square one. Let's close out these sort of extra stock filters. I'm going to direct this to the S&P 500, just as this example. And then we're going to add that study filter, right? But in this case, we're doing a custom study filter. And when we're going to put in a custom scan, the system doesn't know exactly what we're looking for. It's just going to propose by default, well, Cameron, were you in alphabetical order? Were you maybe going to be building a custom scan for the ADX crossover? No, I'm just going to delete that and add my own condition. So if you've ever used this condition wizard before, it's kind of nifty. I'm going to click on this little menu and I'm going to choose study again, because we're looking for this a technical study to be behaving in a specific way. So specifically here, we're using the MACD. So let's type in MACD and look for a signal from the MACD histogram. Down below, it allows us to tailor the inner workings of the study itself if we want to. I'm not going to be doing that today, so I could be changing the construction of the MACD histogram. I'm just going to leave it at its default. Just the default is typically a 12, 26, 9 set of moving averages. But what I do want is to tell the system what I want that MACD to be doing right now. And specifically, I want the MACD to be less than what? A certain value. With the MACD, if it's above the zero line, it's going to be green, signaling possible bullish momentum. If it's below the zero line, so in other words, if it's negative, that'll be red, and we'd be looking at a red histogram bar. So let's say we're looking for the MACD to be less than a value of something negative. Now, usually it's going to be low double digits. Really, the range on the MACD isn't terribly consequential, but just know it doesn't commonly go much out of the low double digits. So let's just say that we want to see a MACD that is less than a negative 2.5. And we want that to be today. So literally within one bar. Today is one bar. So let's save that as our one condition and click OK. So here in our custom indicator, our custom scan, we're looking for the MACD to be less than minus 2.5. And let's scan, see what we get. And it looks like we have about 24 companies where the MACD is less than 2.5. So if I go to a chart, how about we look at maybe Tesla? Tesla was first up there. Is it below the zero line? Yeah. Now, in this case, it's already starting to rise. So our trader might think, hey, might be signaling. It's possible we're even a little bit late to this signal, but in any case, maybe they're okay with that. We just also got past an earnings announcement. If we go back to our scan tool, let's look at our next one, Oracle. Has it taken a relatively steep dive? Has the momentum been with the sellers recently? Here's two. Yeah. And here, what the trader might be looking for is just for that red to shift to a darker red, like it has done here, or here, or here, and that might be signaling lows. Now, you'll see here's a good example of where we got some false signals. So no technical approach is perfect, but this is how we can connect, again, an idea, having MACD low in this case, to a scan that can help us put that idea into practice more efficiently. All right, so we've learned several of the default settings. I tried to find those that would have as broad application to my audience as possible. We've learned the default settings. We've learned how to use maybe a custom scan, but each one of these was just built using one technical study. Yes, they can be used in combination with one another. So for example, maybe we're looking for a MACD histogram that is down below -2, but where our stock isn't too far from recent highs. So because the MACD scan here doesn't discern between a bearish stock and a bullish stock. It's just looking for a recent dip. So could we go to our scan tool and maybe tailor this? Let's come up here and add another study filter. Let's go to a familiar one. In this case, let's add our price performance. If we want to look for a stock that's not too far from its highs, let's look for near high lows. Now, if we're looking for a MACD that has dipped, but the stock that's within 1% of all-time highs, that's just not going to be possible. It's I'll just say nearly impossible, because having the MACD come down means that there's been some recent selling, which necessitates a pullback from, being right at 1% of all-time highs. So let's give it a little bit of wiggle room. Let's say 10% of those all-time highs. Not all-time, but within the last 12 months or 252 trading days. So now let's rescan. Let's see if we eliminate some of these companies here. Let's run that scan again. Yep, only about 7. So we had, let's look at a few of these. How about we look at, we can just go through these. Look at Goldman Sachs. Is our MACD low? It is. Are we within 10% of 12-month highs? We are. Let's go to our scan again. Look at BlackRock. Trading within 10% of all-time highs, but with a recent pullback. So again, for this technical trader, that may be a powerful combination of factors where the trend is still intact, appears to be intact, but there's been a pullback to potentially new lows. Right. But guys, we've actually accomplished what I set out to do today. I wanted to introduce us to the powerful tools found within the study filter on that scan tab. This is going to be a new tool for a lot of you, so I would encourage you, get in there, play around with it first. Don't be afraid to experiment with scans, as long as we're not then going and putting trades into practice. There's no risk in doing this. But if you built a scan and you want to clear it out, you know that you can come up here and reset. But earlier, someone said, Cameron, how do I make this? What was the term you used? Remind me. Trying to use the same term. Somebody asked dynamic. There we go. Dynamic just means updating automatically, basically. But we can come up here. We don't have to rebuild these scans right from scratch every time. We can actually save the scan. So it's going to save the fact that it's being conducted in the S&P 500. It's going to save the fact that we're looking for a MACD that has dipped down below minus 2.5. It's going to save the fact that we're looking for stocks that are trading not at all-time high or 252-day highs, but pretty close. Let's say highs with recent dips. That's what I'm going to call this one. We just give that scan whatever name is meaningful to us, and then click save. And the next time we want to run this scan, let's say that we have reset our scan up here, and we want to reconduct that scan. We can just pop up here, load that scan query. It's just a personal scan, and we can rerun highs with recent dips. Run that scan again. There are now the 6 stocks. One of them must have just changed here. Might not be still qualified. But the other thing that happens when we save a scan that can make this dynamic is that we can just pop over here in our left column, and in our personal watch lists, we go to personal watch lists, we can also run that scan. And it will just automatically populate with those companies right there. So that's kind of nice. Randall says, hello, can I combine indicators such as a moving average on a Chaikin money flow? Yes, we actually did that here. Yep, can do that. All right, but in any case, guys, yeah, we've done what I set out to do today. Hopefully this was insightful to some of you who have never used the study filters before. Quick reminder, this is only available on the live platform. If you're trying to do it on paper money and it says you're not allowed to, just means that it's only on live. Okay. But we've connected example chart scenarios to running scans. Go experiment with this. This is what we do in our Wednesday webcast series. We just get started with the tools that are available on Thinkorswim. So thanks for giving me your time today. I'm going to let you go, but I do have some reminders for you to make sure that you're aware of all of the educational resources that are available to you from Schwab Education. Starting with number one is, if you haven't subscribed to our Trader Talks channel yet, please do so. So let me just get us here to that Trader Talks homepage. But the full name of our channel is Trader Talks Schwab Coaching Webcasts. You can go down below the live stream right now. Just click on the subscribe button. It doesn't even have to be the live stream. Just even if you're watching the recording, click on the subscribe button. It only takes a second, doesn't cost anything. But this is where you can join the live streams and you can find our playlists of previous webcasts. Now, another suggestion that I have for you is that Connie and I are both very active on X. It's the best place to connect with many of your favorite Schwab presenters. If you have an account with X, give us a follow there. So you can find Connie on X at Connie Hill CS. You can find me on X at Cameron May CS. And if you reply to one of my posts here, I try to reply right back to you. But very importantly, as of this week, there's another way to connect with me, and that is on LinkedIn. So you'll notice right at the top of my X feed, fabulous news. You can now also follow and interact with me on LinkedIn. You just look for Cameron May. So if you want to make sure that you have the right profile, look for me. I'm going to be this guy sitting there smiling at you with this Scottish castle in the background. And if you reply to my posts here on LinkedIn, I will reply there as well. And, unlike X, where I have 17,000 followers, and I do give personal attention to anybody that wants to reply to one of my posts, as long as it's not just too hot to touch. Sometimes, you know how people can be on social media, say something, and I don't want to say anything in return, get myself in trouble. But as long as we're having a good conversation there, I reply to even that big audience on X, but it's a small crew here on LinkedIn. So if you want to join us there, that'd be great. Just give me a follow there. Not everybody has an X account, so there's another opportunity to communicate with me. Everybody, thanks for joining me today. I will see you in future webcasts. I'll also look for you on X, and I'll look for you on LinkedIn. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.